So how do you diversify your portfolio with alternative investments? Now, this is not going to be the same old thing you've been hearing all the time, so be sure to tune in. But I'm telling you, we're going to talk about just that. How can we actually diversify in real diversification? All right, you ever heard you have to diversify, you need to diversify? What does that really mean, right? How do we even know what that is supposed to be? Because despite some financial advisor telling you to do that for years, is that really being diversified? I'm going to talk about in this video how it's actually not diversification with what you normally do and what you can actually do to diversify. Okay, so first and foremost, when they tell you to diversify, right, what they're saying is don't throw your eggs in one basket. Now, there's a lot of different perspectives that come to diversification. For example, Robert Kiyosaki, who's the author of Rich Dad, Poor Dad, will say diversification is like buying 5 used cars just in case one's a lemon, right? In case one goes bad, you buy 5 of them. Now, there's also other people like Mark Cuban, who you guys might have seen from like Shark Tank. He owns the Dallas Mavericks, if you're a sports fan. And he'll say diversification is for idiots. But what's the truth? I mean, should we diversify or not? Personally, I think diversification is a great thing. However, when people tell you to diversify, for example, many financial advisors will say this very same thing, it's not really diversification. I'll give you an example. I remember one time I was sitting with my brother-in-law. Now, understand that my brother-in-law came from a wealthy family. His dad was a self-made millionaire. He was technically a runaway teenager, homeless at the age of 16. By 19, got his first car dealership, and by the age of 21, in the 1960s, he became a millionaire. Which, by the way, a millionaire in the 1960s was a lot cooler than being a millionaire today, where you're basically middle class, right? And so naturally, as a financial advisor, when I used to be the traditional financial advisor you hear about, by the way, just so you know, my shirt says it all. Financial advisors are people who pay to sell you crap, not actually make you more money. Well, when I sat down with my brother-in-law, I was wanting to impress him because I knew if I can get in with him, I can get in with the rest of the family, and I'd be set for life as a financial advisor. So I sit down with my brother-in-law. I give him the whole presentation about everything, about here's where you invest in mutual funds, and hey, if you're lucky, you might even make 12% a year, and things like that, right? Which was never true, but that's what we were told all the time as financial advisors, to tell people that's the average return of the market, when really it's not quite that much. So I'm telling him all this stuff. And then my brother-in-law pauses and tells me, it's like, listen, Chris, this is a great presentation and all, but let me ask you something. If I give you just $10,000 to play with, you're saying you might be able to make me $1,200 in a year, right? 12%. I said, well, yeah, I can't make any guarantees, but yeah, I mean, isn't that awesome? I mean, $1,200 in a year? I mean, what would that be in 5 million years, right? And he said, okay, Chris, but I can also put $10,000 in my business and go and turn around and sell a semi-truck and flip it for a $20,000 profit in just a couple months. So Chris, why should I invest with you? My answer was, you should diversify. You should put all your eggs in one basket. Besides, business is risky. Ironic that I'm a financial advisor with my own business and I'm telling him not to do the same thing I was doing myself, right? But of course, I was just trying to sell him on those things, right? Again, I was paid to sell crap, not necessarily make people more money. And he sent me with my tail between my legs. He said, Chris, thank you for your time. We'll see you later. Well, here's the thing, guys, is that diversification, like when they tell you like a mutual fund is diversified, the stock market is diversified, it is not diversified at all. Not at all. In fact, the truth is that diversification really has 4 asset classes. The first one is paper assets. Yes, mutual funds are a part of that. Stocks, bonds, even savings accounts, heck, even whole life insurance like we talk about with infinite banking. Things like that is also all paper assets. Almost everything you buy from a financial advisor is a paper asset. But that's just one of those 4 classes. There's also business, actually owning in a business. For example, Warren Buffett does not buy stocks, he buys businesses. Many people that are friends of mine that are private equity investors, they buy businesses, right? They're actually invested in a business, not a stock. Then there's also real estate investing, which we talk about all the time. Real estate is its own asset class. And then there's commodities, things like gold, silver, oil and gas, corn, soybeans, you name it, right? Those kind of things are real commodities when you invest in those real things, not the paper version of those things, which is just a false version of it, but the actual asset. Those are the 4 asset classes. If you're going to diversify, it should be among all 4 if you're trying to diversify among those things. And so the truth is that most people are not diversified at all because you've always been taught by financial advisors, financial experts, and everything to always buy that one asset, which is paper assets, right? Those savings accounts, those CDs, money markets, annuities, mutual funds, 401ks, IRAs, all of those things are pretty much all invested in paper assets. Even if you say, well, I'm not just in stocks, I'm in bonds. Well, guess what? Bonds are also paper assets. They're all part of the same thing. This is why in 2008, as well as in 2022, when people put their money in stocks and bonds, they lost money in both. They lost them in both areas because they were not truly diversified. A true diversified portfolio, if you're really trying to go for that, is actually having multiple asset classes, not just paper assets, which is all financial advisors really offer you. So the question comes back to, how do I diversify into alternative investments? Because the truth is, alternative investments, although there's some in the paper asset category, many of them are in real estate, business, as well as commodities. So how do you actually do that? And I'm going to speak from my own experience of what I've done for my own self. Now, this is not investment advice. I'm not telling you to do exactly what I did because everybody has different goals, different objectives. And the truth is, I could always be wrong, right? I mean, I'm not perfect. In fact, if anybody claims to be perfect, you know they're a big fat liar, right? So obviously, I'm trying to give you that perspective based on what I've done. So I'll start with real estate investing. This one is easy to do. In fact, you can even be diversified within real estate. I don't just buy properties in my backyard. I'll buy a variety of types of real estate properties. For example, I'll buy rentals, but I don't buy rentals that I have to manage. I can actually buy rentals in different markets all around the country. I've learned, I live in the western half of the United States, I've learned that real estate is actually not very good here if I want to buy rentals. The prices are high, but the rents aren't as high to keep up with that. And so as a result, you don't really make any real profit, no real money on that. But if I go buy in the Midwest or in the Southeast of the United States, guess what? Prices are lower, but rents are still higher. So as a result, I make more profit. And so that's a great place where I can go and invest. And I'll buy through companies called like turnkey companies that will help me buy these properties and then also set me up with a property manager in those areas so I don't have to do that work. I'll also do things where I'll lend my money in real estate deals, and they can also be in various parts of the country. By the way, being in various parts of the country is a good thing to diversify because if you're in just one single location, if that location gets hit and hammered, you can be in trouble. For example, Detroit, Michigan was not the place to have real estate in 2007 and 2008 because when all of a sudden those things went south, especially when the auto industry was tanking in the early 2000s, that affected all the home values. And as a result, I actually literally found properties I could buy for $1,000 in Detroit. Yes, it had air conditioning, AKA bullet holes inside of it. But the thing is, I would not want to buy some piece of crap out there, right? Plus, it was all based on the auto industry. It wasn't diversified. Same thing with Las Vegas. If all of a sudden gambling goes down, the whole hospitality entertainment industry, if that goes down there, everything goes south. You have to be in a place that has multiple companies, industries within it that makes you more diversified because they have diversified types of jobs and things like that. Now, I can also lend my money. Like I said, I can lend my money to other real estate investors. I can go buy raw land. By the way, when I do this stuff, when I say I buy it, really I fund it and then I let them do the work, right? So you can do lots of different things that way. Now, what are some other things you could do? I mentioned business. Business, you can actually invest in private equity. You can actually invest in companies without buying a stock. There are many, many companies that might be smaller that are willing to take private money versus just trying to raise stock prices, right? They're willing to take your money as a private individual. Yes, you might have to be what's called an accredited investor, where you make at least $300,000 a year as a couple, $200,000 as an individual, and or you have at least a net worth of $1 million, not including your own home. You could be an accredited investor and invest in many of these things. So you can actually invest in companies. You can actually buy a franchise. You can actually invest in some of those. It might be a little bit more active. It's not fully passive, but you can have systems set up in place and people and employees to help make more money there. So business can be a great place to do it where you actually have real money. And by the way, businesses are one of the best places to create wealth in any kind of portfolio. And then lastly, I mentioned commodities like oil and gas, gold and silver. Now I'll buy the physical, tangible stuff of gold and silver and things like that, but oil and gas, I actually have money in an investment with partners. So it's a business partnership, but it's based on the royalties paid from the drilling of the oil and gas being pulled out of the earth. So as a result, I get paid off of that because essentially the oil companies are paying rent for that land and they're paying us royalties to be able to use that land. And so we get to share in the profits together. And so if oil prices go up, gas prices go up at your gas pump, guess what? I make more money. And you can too. Instead of you always having to pay for more of it, you can actually make more of it when those prices go up. So there's lots of different ways to diversify that just financial advisors will not teach you because they cannot offer it. They're paid to sell you mutual funds, which are primarily stocks and bonds, but they will not truly diversify you at all. And that's why diversifying through alternative investments can be one of the best ways to be truly diversified. Now I'll give you a story of one of my clients here just really quick because This is a big piece to make sure you protect your money and your wealth. Now, he was in a lot of different investments, not things that we necessarily set up for him, but he was in a lot of different investments in the real estate space and commodities and things like that. Well, 2022 was a hard year, even in the real estate space. Even though real estate tends to be safer, it still got hit hard in certain parts of real estate. Well, he lost about 25% of his money. However, because he was truly diversified, he actually made a lot of money in these other places that more than covered those losses and actually still made him a lot more money than he would have made with a traditional financial advisor. So guys, when you're truly diversified, the thing is with a financial advisor, if you're just in paper assets only, the market can go down and everything loses. You don't get to keep anything. But here you can make sure you have good diversified portfolio. And the problem is you just don't have financial advisors that like to teach you about those things because they're not paid to do that, or they just don't understand it enough to even help you do so. Now, everybody always asks, Chris, how do we do this? Like, how do we actually figure out how to do alternative investments? My best advice for you is go follow our Money Ripples podcast on our Money Ripples podcast channel. Check that out right now to see how you can actually do other investments outside of the traditional stuff that financial advisors will recommend. Check that out right now.